As the November 3rd election date draws closer, tax policies are on the table. In today's video, we're going to discuss some of the key differences between Joe Biden's tax plan and Donald Trump's tax plan. I hope to break it down, simplify it in an easy to understand fashion so you know what tax policies that are coming out and how they might impact you. Good morning, everyone. My name is Mike, the CPA. Welcome back to Money in Life TV. On this channel, we teach finances, investing, and taxes. Hey, do me a favor real quick. If you want to support the work I do here, drop me a like, subscribe, share this video, and drop a comment below, and let's get into it. Now, you should know if you're new to taxes that these policies we're going to discuss today from both candidates, before they can be enacted, they have to be approved and pass through all the proper channels. Therefore, everything we discuss today, some of it may change depending upon who wins, and depending upon what the modified version of their final tax plan is. All right, here we go. I'm gonna try to do this in the most non-biased fashion I possibly can. As a CPA, this is the kind of stuff that makes me nerd out. I really enjoy looking at tax policies. I know it sounds sick, but it's true. Kicking things off, let's talk about individual tax rates because this topic affects every single taxpayer in America. Currently, the top tax rate is 37%. Now, this is down from the highest rung, which was 39.6 prior to the Tax Cuts and Jobs Act, which was implemented by the Trump administration. So under Biden's tax policy, what he would like to do with these tax brackets is re-implement the 39.6 tax rate for families or individuals who make above taxable income above $400,000 a year. You can pause the screen if you'd like to see this, but this on the left-hand side, this was prior to Tax Cuts and Jobs Act. So Biden's tax policy would be more like this, these rates and these income levels. Not exactly, but very similar to what you see on the left-hand side. And under Trump over here, the Tax Cuts and Jobs Act, you can see the tax rates presented right here. So most Americans, if you're wondering, fall between the 10, 12, and 22% bracket. And if we go under with the older rates, how they used to be, Americans used to fall between 10, 15, and 25% the majority of the time. All right, you investors, now let's talk about capital gain rates since we're talking about tax rates in general here. Currently, the top rate, if you're an investor, if you buy and hold a stock and you hold it for more than a year and 1 day, and you sell it for a long-term gain, the highest rate of tax you would pay on that gain is 20%. But that's not until your income is essentially over $441,000 under the current tax law as things are right now. So what Biden would like to do is he would essentially follow that plan, except that for individuals or families who make over $1 million a year, then they would no longer get the preferable tax rate treatment on long-term capital gains or qualified dividends. And instead of that 20% rate, they would actually have to pay at whatever their marginal tax rate is, which if it was $1 million, then you would pay 39.6% on your capital gain transactions. Now, for those of you who are new to tax, capital gain tax rate treatments is some of the best tax treatment you can get, because the brackets on those starts at 0, goes to 15, and ends at 20. So some of you know from watching some of my previous videos that if your income is below like $40,000 or $80,000 if you're married filing jointly, then you can actually have some capital gains or qualified dividends and actually pay 0 in tax on those investments. Furthermore, Donald Trump, he would like to index capital gains for inflation, but he also wants to reduce the capital gain tax rate. I don't have further details on this yet. It's a little muddy, so I have to wait and see what else comes out on that. But he would like to enact a capital gain tax holiday that eliminates capital gain taxes for a yet to be identified period. We don't know what period he's referring to as of yet. Now, what about the net investment income tax? That would still remain under both candidates. So the net investment income tax came into effect during the Obama administration. And what that does is it says if your income is over $250,000 a year, well, then on your capital gain transactions, you have to include another 3.8% tax on top of that. So if the top rate is 20%, for example, then you're actually in total paying 23.8% if you include the net investment income tax on those investments. Okay, itemized deductions. Now, if you remember, under the Tax Cuts and Jobs Act, what President Trump did under his policy is he raised the standard deduction for everyone. So everybody got a higher standard deduction, But what he did is he took away some of the itemized deductions that are available, because you can either take a standard deduction or an itemized deduction, whichever is more favorable for you. So that would essentially, from what I'm seeing from my research, under the Trump's policy, itemized deductions would stay the same from what I'm seeing. Now, under Biden's plan, what he's proposing is that it sounds like he would follow what Trump's doing, except the main difference is he would have a provision that would cap the tax benefit of itemized deductions at the 28% tax rate. I don't know all the details of that yet, but so what he's saying though is once a person's marginal tax rate is 28% or above, then their itemized deductions, whatever they had, is going to start to be limited and phase out once they enter those higher income levels. Speaking of standard deduction, let's talk about some potential changes to that. So under the current law, so if you're file single, your standard deduction is roughly $12,400. If you're head of household, your standard deduction is $18,650. And if you're married filing jointly, your standard deduction is $24,800. Now, after 2025, as under the current tax law, under Trump's plan, those amounts for the standard deduction are set to revert back to what they were before the Tax Cuts and Jobs Act. And we can see what those amounts were right here. And so instead of the amounts we just listed, it would go back to roughly, if you're filing single, it's $6,500. Married filing joint is around $13,000, and head of household is $9,550. So quite a big difference if we go back to the prior law. Now remember, the standard deduction, what it's great for, what it's used for, is it's the default deduction everyone gets if they cannot itemize. You get to do one or the other. But the standard deduction, essentially what it does if you are new to taxes, is that it reduces a person's taxable income dollar for dollar. So the larger amount of your standard deduction, the less income you'll have subject to taxation. So that's why it's good that the higher that number is for your standard deduction, the better. But that's essentially how it works. Now, under Biden's plan, I haven't heard details, or I could not find any details regarding how he would treat standard deductions. I suspect he'll revert back to the prior law because he has some other credits he wants to implement, as we talk about those next. But that's just my assumption on that. I don't know specifically what Biden plans to do with standard deduction. All right, let's get into some tax credits here. One of the most lucrative credits on the tax form is the child tax credit. Now, under Trump's plan, or his current proposal, things would stay the same. So essentially, for other dependents, you get $500 a person, but for each qualifying child who's under the age of 17, you can get up to $2,000 per qualifying child. So that's how the plan is now. However, one amendment he has is he would like to require Social Security numbers to be eligible for these credits. And I think the reason he's doing that, in my opinion, is because there is an unprecedented amount of fraud regarding people trying to claim the credit for children who aren't theirs, for children who are not U.S. citizens, and all these other things. So there's a lot of complexities around that, and I think that's part of the reason he's pushing for having more identification before somebody can claim the credit. What would Biden like to do with the child tax credit is he would like to increase that amount actually from $2,000 to $8,000 and even up to $16,000. I think that would be the max. If a person has 2 or more children, that would be the max child tax credit they could take. Let's talk about education and student loan forgiveness here for a second. Under the existing tax law, if someone is able to get their student loan debt forgiven, what that would mean is the dollar amount of debt forgiven would then be includable in taxable income for that tax year. Now, what Biden's proposing in his plan is that he would have a special provision, a special exclusion, that would exclude that debt forgiven amount from being added back to your taxable income. Continuing with education, what Trump would like to do here in this area is increase the amount of scholarships available for students. And the way he's proposing to do that is allowing more tax breaks. Currently, under the existing law, there is not a lot of tax benefits if you donate money to like a state school or a state authorized organization that sponsors scholarships. So he wants to change that so that if whether you're an individual or whether you're a corporation donating to one of these sponsorship programs, scholarship programs, then you would be able to not only fund the school, but you would also get a tax break as well. So more scholarships is what he's getting at here with this tax policy. A couple other items regarding credits. So under Joe Biden's plan, he would like to expand the EITC, which stands for the Earned Income Tax Credit, to workers who are 65 years of age or older who do not have qualifying children. He would like to enact $5,000 tax credits for family caregivers of people who have certain physical and cognitive needs. He would like to enact a refundable advance tax credit for first-time homebuyers, which is up to $15,000. Lastly, he would like to enact a renter's tax credit, which is designed to reduce rent and utilities to 30% of income for low-income individuals and families who make too much money to qualify for a Section 8 housing voucher. Let's talk about now Joe Biden's plan with payroll and tax cuts and things like that. Under Joe Biden's plan, he would like to apply the Social Security payroll tax of 12.4% to those who are earning above $400,000 a year, which means that if you make between $137,000 a year up to $400,000 a year, you will be not subject to that tax. And so the way I interpret that is, let's say you're above 400,000. I'm interpreting this in one of two ways. So let's say you're in the highest income tax bracket of 39.6%, but then you would add either the full 12.4% on top of that, so that would be your tax rate, or you might split the 12.4% halfway with your employer, and then you would add that to your top rate, so you'd be at 45.8%. Now let's talk about inherited assets or stepped up in basis. Now I think this one I really want to explain a little bit more, because I think most people, when they see the word step up in basis, it doesn't mean a lot. They don't understand what that actually is. And so let's talk about what Biden's proposing in his plan. Now under Trump's plan, it would basically remain the same. So like what step up in basis is essentially, ladies and gentlemen, is if somebody dies, so let's say it's either your mom dies or one of your parents die, and they're gonna give you the house, like you're gonna inherit their house. So let me just show you with the calculator real quick how that works. So if you're inheriting that house, and your mom and dad, they bought that house for $100,000, well, that house is now worth $400,000 when they died, is what it is now. When you inherit that house, your cost basis for tax purposes is not the $100,000 they paid for it, it's the $400,000. That's how step up in basis works. It steps up the value to the value it was at their date of death. So you inherit that house, and let's say you sell that house for $450,000. You subtract your cost basis of $50,000, so your gain is only $50,000. Now, what Biden's proposing is getting rid of the step-up in basis concept. So what it would mean is, we're using that same example, yeah, you inherit your mom and dad's house, but now your cost basis is what they paid for it. So you sell it for $450,000, but your cost basis is now only $100,000. And so you would pay gains on not $50,000 now, but $350,000, because you did not receive a step-up in basis to the value it was at their date of death. And so that's essentially how that works. I wanted to explain that because I think most people wouldn't understand what that means. Now, speaking of inherited assets, let's talk about estate taxes here real briefly. Now, I know this doesn't affect most people, but right now, if you're single and you pass away, you can have up or just over $11 million in assets before any of your wealth is subject to estate tax. If you're married, that amount is roughly $22 million. What Biden would like to do in his tax plan is revert that back to what it used to be. So it was, instead of it being like a 10 or 11 million under Trump's plan, it would revert back to 5 or 6 million roughly. So a smaller amount of assets you would own before being subject to estate tax. And of course, it would be $10 million under Biden's plan if you're married filing jointly before your wealth is subject to estate tax. The estate tax is commonly referred to as the death tax. Okay, let's talk about business here just for a second. Just a couple things to mention. So the first thing is the qualified business income tax deduction, and that is known as Section 199A. I have a few videos on that. So under Trump's tax plan, that would still be in effect. And essentially, if you don't know what that is that's if you qualify for it, if you're a business owner or you make money through a business, then you're able to get a 20% reduction on your pass-through business income. So if you make, let's say, $100,000 in taxable business income, you're basically based on your net profit. Well, then you get to take off 20,000 of that, and only 80,000 will be subject to tax. So that is still looking like this is going to be in play. Under Biden's tax plan, it sounds like he is still in favor of having the qualified business income deduction, but he is looking to phase that out once a person's income And I don't know if it's for single or married filing joint, but basically once a person's or family's income is above $400,000, that deduction would no longer be available. It would completely phase out at that point. Lastly, let's talk about corporate tax rates. And I've mentioned this before in a previous video. Under Trump's plan, the max corporate tax rate would remain at the flat 21% rate. Under Biden's plan, that rate would go from 21% and he would increase it to 28%, which is still less than the max corporate rate, what it used to be before the Tax Cuts and Jobs Act ever came into effect. The other thing Biden would do with corporate taxes is what I saw is that he's proposing that once a corporation makes over $100 million in profit, then he would reinstate an AMT tax on top of that income. All right, guys, well, that is all the information I have for you. Whew, that's a lot to digest. Like I said earlier, guys, this is going to change. It's not going to be exact, so wait to see what rolls out. We'll see if the candidates talk more about their tax policies as the election date draws near and just see what happens. But these are some of the things they're proposing and what you might expect depending upon who wins the presidency. I hope you found this information helpful, but let me know what you think in the comments. Which tax plan do you think would be best suited for you and why? You know, if you had to choose one or the other, which one would you choose? Well, before you guys head out today, I would really appreciate it if you drop me a like, and I'll be producing a lot more videos around finance and investing in taxes on a weekly basis, so subscribe to not miss those. I'll see you down in the comments, guys. Have a wonderful week. Most importantly, live life uncaged. Peace.